So the highlight we brought up today is with tools of order types, tracking other people's positions, looking at the reaction of big orders that come in with icebergs and the reaction of price to that big iceberg order, to that big seller, to that big aggressive buyer, to a resting bidder offer, and some of the tools that are used and shown through the chart you're looking at now. A way to say it that I think helps people understand reading order flow is you could identify buying through, and let me spell it, selling. You could identify buying through selling. You could identify buying through selling. What does that mean? I could identify an appetite for buyers based on the reaction to selling. That's what that means. And we came with an analogy today with let's just talk about the prices of homes. In Texas and Florida, a couple states that are hot in the real estate market, when a home goes up for sale, bam, it's gone. It's bought. I could identify buying and the appetite for buying by how quickly a house that goes up for sale gets bought. That's pretty simple. Well, why wouldn't you use that when you're looking at order flow in the particular stock you're trading or a particular futures you're trading, anything with a price attached? A house has a price attached to it. A house has buyers and sellers. So does the S&P E-minis. So does a small cap, a penny stock, Apple, whatever. Has a buyer, has a seller, has a price. Let's play ball. So when you see a seller come in and wham, he gets lifted, it's an appetite for buying. So we can identify buying through selling. And that's the impetus in the beginning of reading order flow like a pro, instead of the conventional wisdom of big buying, let's buy it, big selling, let's sell it. No, big buying and it can't go up, let's sell it. Big buying and it gets filled right away, let's sell it. It's the fact, it's the reaction you read. And if you think about it, that's a skill, and you need a skill in order to create an advantage or edge. But it's the right skill. If you don't have a skill, everybody could do it. You have a skill that most people don't have and will never have, because the rotation and the revolving door of money that comes into this business through the retail side are people that never find me because I'm in the back of the store. They'll always find the guy in the front and on the sidewalk in front of the store of trading education that's selling them a dream. Most people will come in that way and never get to the back of the store. So they'll donate to people who end up knowing what they're doing to create the skill. They'll sell them a dream by selling them a system, by selling them, nonsense. And again, it's not the person's fault that takes the pamphlet out on the sidewalk that goes in the store and buys that, because you don't know what you don't know. So the point is, the skill will never be ascertained by anybody, by most people, no matter how popular I am at talking about it. And 99.9% of the people that find me because I'm different. Not different looking, different talking, but what is communicated. And it's why didn't I think of that? That's the path that's different. Again, it's because most people are used to the indicators and the bells and the whistles and the red light and the green light and the nonsense that's out there. Look at the guy who's educating you. And I don't mean to be abrasive, but I won't get into that. I don't want to offend people. Maybe I will later. But it has to make sense. Identify buyers through the sellers, identify sellers through the buying, the pace at which a buyer or seller gets picked up, gets filled. In the case of this iceberg, they chased it up a little bit, got filled, and it marked a near-term top. The case of this iceberg in here, he quickly got bought, and we knew that the upside was probably the right side. Here, instead of having to wait till up here when it's way, way too late, or even here when it's kind of too late. We had a big aggressive seller that took a lot to fill him and only came halfway back and marked a little bit of some downside. It came back all the way to where this iceberg got lifted. No coincidence. Subsequent support. Turned back up. Where did it go? Overhead resistance where that iceberg, and where they flew through it to the downside in here. So you understand from the beginning, and the beginning and the basics is not what you think it was. And it's certainly a void in trading and people who try to trade, no matter what they're trying to trade. The biggest void are the basics. So I make basic to you what's basic to me and just constantly go over that because the basics are the advanced stuff in this business. And the reason why it's the advanced stuff is because it's always skipped by 90% of the people who try to do this. They generally skip why and what governs price action, and yet they're trying to predict it. The fact when I did that slide, most people have questions about it. Not you guys, because you got some education behind it now, but guys that are first exposed to that one slide that I did about how sell stops would be indicative of longs getting knocked out. They don't get that, or they don't get buy stops indicative of shorts puking, or they don't get how people who get short are now buyers until you're telling them that and they understand it. Wait a second, I never thought of it that way. And these guys have been trading for 2 or 3 or 5 years. It's the whole shoot match. That's why price moves. So if you don't know why price moves, you have no business trying to predict it.